Welcome back to Explain the Charts. Today we're analyzing Meta Platforms Incorporated stock, and exploring the current news events as well as diving into its recent chart data to see if we can find any correlations. Looking at recent news, Meta has been in the headlines for several reasons, including confirmed layoffs across multiple teams, including Instagram, WhatsApp, and Reality Labs, which is always something to consider in a stock's performance. However, despite these layoffs, Meta stock has been on a tear since the start of 2023, with a nearly 400% gain. Analysts are getting more cautious on Meta ahead of its Q3 earnings report, citing concerns about its reliance on other tech giants like Apple and Google for its core business. Meta's heavy investment in the metaverse, particularly the development of Orion, prototype augmented reality smart glasses, has garnered significant investor interest. This vision, while ambitious, also comes with concerns about production costs and potential privacy issues. It's important to consider these news events and their potential impact on Meta's future performance. Now, let's move to the charts to see if we can find any confirmation of these trends. The daily chart reveals a strong upward trend in Meta since the beginning of 2023. We can see this trend clearly by focusing on the candlestick data of the past year, starting from the beginning of October 2023. From that point on, we see a consistent series of green candles indicating higher highs and higher lows, representing bullish momentum. However, it's worth noting that the recent green candle, representing the trading day of October 16, 2024, shows a closing price slightly below the previous day's closing price, suggesting a potential slowdown or shift in momentum. Could this be related to the news about analysts becoming more cautious on Meta? It's possible, but we'll need to delve deeper into the hourly chart to see if this is a trend reversal or just a minor dip. On this daily chart, we can identify some key price levels. The $500 price level seems to have acted as strong support in the past few months, as the price bounced back after falling below this level in July 2024. This suggests that if the price dips below $500 again, it could be a strong signal for a potential bearish correction. On the other hand, the $550 price level has acted as resistance in the past few weeks, as the price failed to break through this level on several occasions. A successful break above $550 could signal a continuation of the bullish trend. The $600 price level might be a target for bulls in the short term. However, the recent slowdown in momentum and potential resistance at $550 may prevent the price from reaching this level in the immediate future. Let's narrow down our focus to the hourly chart and see if we can find any clues about the potential slowdown or trend reversal. The hourly chart reveals a more granular view of Meta's price action. We can see a series of green candles indicating bullish momentum leading up to the end of September 2024. However, starting from October 1, 2024, we see a notable increase in red candles indicating bearish pressure and price dips. This reinforces the idea that the bullish momentum may be slowing down or reversing. Focusing on the past few days, we can see that the price failed to break above the $585 price level on several occasions, suggesting potential resistance at this level. It's interesting to note that the price dipped below $580 around October 15, 2024, which is around the same time analysts started expressing caution. Could this indicate a correlation between news events and Meta's price action? We can see some support around $575, which may provide a floor for the price in the short term. A sustained break below $575 could signal a more significant correction. The $600 price level, while a potential target for bulls, may be more difficult to reach due to the recent bearish pressure and resistance at $585. The hourly chart suggests a potential short-term bearish outlook, but the long-term bullish trend may still be intact. We need to monitor the price action closely to see if this bearish pressure is temporary or if it signals a shift in the overall trend. Let's go even further down to the 15-minute chart, which can help us understand the short-term volatility and potential entry and exit points. This chart gives us a very granular picture of the price action and helps us pinpoint potential buy and sell signals. Looking at the data from October 14, 2024, we see a series of green candles indicating bullish momentum, pushing the price above $590. However, this bullish momentum was short-lived, as the price quickly reversed and started to decline. The price action on the 15-minute chart aligns with the bearish pressure observed on the hourly chart. We can see that the price failed to break above the $595 price level on several occasions, suggesting potential resistance at this level. The $590 price level might act as a short-term support level, but it's essential to monitor the price action closely to determine if it holds. If the price breaks below $590, it could signal a more significant correction. The 15-minute chart highlights the short-term volatility and suggests that traders need to be very careful with entry and exit points. It's important to consider the overall context of the daily and hourly charts when interpreting the 15-minute chart data. While the 15-minute chart suggests a potential for short-term bearish pressure, we need to see if this bearish pressure extends to the hourly chart and ultimately the daily chart.